What's up, folks? It's your boy Kenneth. It's 100 Years of Wealth, streamhomeloan.com. Back at it. Hope you're well. Thanks for checking in. Go ahead and like and subscribe. And when you get the vibe, go ahead and make a comment. So I'm making a quick video as I am jumping back into the office to handle some business. But this has been on my mind as I'm working with agents. I'm always getting these questions, and this is something that is the key to success. This is totally relevant in today's market. Right now, anyone that is dealing with real estate or mortgage knows that we are dealing with a super high interest rate market. High is subjective, but it's high compared to where the rates have been over the last few years. Mainly even, let's say 6-7 months ago, rates were much lower. Well, maybe 8 or 9 months ago as we turned towards the end of the year. But, and obviously within that, you're gonna see a massive reduction in how many transactions are going on in our industry. So, for loan officers and for real estate agents who are solely production driven positions, there's no goal to nurture a relationship just to have the relationship. Well, I guess when you think of most industries, it's all production driven, but in our environment where we are commission paid employees or commission paid independent contractors, it is all about getting the deal closed. So if deals aren't closing, people are dipping into savings, and things are getting tighter and more stressful as you go forward, right? So what I like to remind my agents is that even though transactions are down, because of the nature of the business that we're in, or the side of the business that we're in, we're not in the retail side of the business where we work inside of, let's say, a direct lender, or we work inside of like a bank like Wells Fargo or US Bank. In those environments, you traditionally have to do a lot more transactions to make a decent monthly income. A lot of times your income is comprised of a base salary that the company is giving you. A lot of times in a commission environment, they are giving you a minimum wage base because the potential to make a lot more based on the commission is there. So they're gonna pay you minimum wage plus commission. On the broker side of the business, it's usually the same way. If you're working in-house at a broker, minimum wage plus commission. And that commission percentage varies per company, of course, but usually it's going to be maybe a 50% commission split. Maybe you'll get 35, they'll take 65 because they're giving you a base plus leads. It really depends on the setup and what the company is providing you. In those environments, I think that when rates go up and transactions decline significantly, it's way harder to survive because you're already getting a large chunk of your commission taken out because the company is providing you with a base pay, or they are providing you with leads. So you're not going to make as much per deal. So closing less deals in those environments really isn't going to work, especially from the company standpoint when they're spending a lot of money to drive the traffic to you. So what you'll see is what we've already seen in this industry this last few months: big companies that house a lot of loan officers, big call centers, immediately closing their doors for some, and for others really reducing their staff significantly in a very short amount of time. And the reason is maybe the company has funds to sustain those employees, but they don't have resources to keep going out there to drive in the traffic because it's harder to drive in traffic when rates have jumped up, right? So these are all basic concepts and all the things that we're currently dealing with in the industry. The great thing about working on our side of the business, which I like to call the independent side of the business, where agents are making a lot more of the commission. Generally speaking, in our company, they're making 100% of the commission. And on certain transactions, they're paying a flat fee to close a transaction. Certain transactions, they're not paying a flat fee because the company is a lender and they're going through our lender channel. So in that scenario, the company is able to make a little money on the back end, right? So in this environment, even our agents that make a lot more per transaction are dealing with the fact that there's just a lot less transactions going on. But I want to remind them that the fact that you make more per transaction gives you a strategic advantage to survive in this industry. While loan officers that are working in-house at companies currently, they really don't have any options, right? They have to deal with what their company is providing, and they have to work within that system. And a lot of times they are not in control of the lead flow or going out to find leads. And if they were to go out and find leads, it wouldn't make sense for them probably to bring them back and close them at a company that's not going to pay them like an enhanced or an increased split based on them providing the lead. So these are all things that, you know, go into the, I guess, like the concept or the variances between working independent as a mortgage broker, or working as a in-house call center loan officer, things like that. Those are the different variations between those two positions, even though you are still a loan officer. On our end of the business, our agents, like I said, are receiving 100% of the commission. So if they get a deal, they're receiving all the commission. If it's through our correspondent lending channel, they're not paying a flat fee. If it's through our broker channel, they're paying a small fee. So an agent closes one deal at a decent commission, and that's going to vary per loan amount, of course, but it gives you an ability to survive a lot longer off of that one transaction than a loan officer closing one or even 2 to 3 deals at an in-house lender where they're only getting paid, you know, a lot smaller percentage, right? So in this market where it is harder to get those deals for either side of it, I remind my agents that the key to success in this business, the key to survival, the key to even thriving at this time in the market is consistency of prospecting, the consistency of your outreach. You have to be consistent with your outreach to some sort of a lead source. Whether that lead source is you are contacting friends and family and asking them for contacts of their friends and family and asking them for contacts of their friends and family, and you're really working your greater referral network very aggressively, that's a way to create business. Obviously, referrals and friends and family can only go so far, but that's a way to create some sort of contacts. But like we said, it can only go so far. So where can you access a source of contacts that, I don't want to say it's endless, but where you can create some sort of consistency with it? And a lot of times that's going to take you investing a little funds into some sort of a lead source. There are companies out there still driving lead traffic. And the reason lead traffic is still there is because even with interest rates up, homeowners, home buyers, people still want to achieve a certain goal. And even if at the end of it, they find out that maybe that scenario didn't work out, they're out there, they're looking for it. They're trying to be convinced that, hey, I can cash out, I can refinance. There is a way for me to save money, because what you'll find is that even if someone has a 3% interest rate, it doesn't mean that it's fixed their financial situation, right? It doesn't mean that their life is, or their finances are perfect and they don't have any other needs because they're in a great interest rate. That same person that has a 3% interest rate could also have $50,000 in credit card debt that's weighing down their monthly cash flow. So when you come at them and you present them with an opportunity to pay off that debt, even if it means a higher interest rate, then you know that there's an opportunity right there to potentially refinance that client's loan, help them take cash out to pay off debt, and help their situation. So a lot of times we get caught up in what we think is going to be a client's perspective on the current market, the current interest rates, when the reality of it is that most people are looking for savings, they're looking for cash flow. And you know, if you have the luxury to say, nope, I'm not going to do anything because I have a great rate, then that's great. But a lot of people don't have that luxury to say, you know what, I'm not going to access cash, I'm not going to pay off this debt just to hold on to that low interest rate. So you got to really put yourself out there, make contact, be consistent, reaching out to lead sources, and you'll find that there are deals out there. Because I'm sure if you looked at the countrywide or even statewide numbers of transactions that are closing, you're going to see that there are hundreds of thousands of refinance transactions still going on. You have to ask yourself, why am I not grabbing up a few of them? As an independent loan officer working on a 100% commission scale, you don't have to do a bunch of transactions to make a bunch of money or to make a good income. You can do a couple of transactions on a monthly basis and make really good money. You can do one transaction and probably have a decent income. So my point is that get out there, be active, be consistent, and you will see the results. And when you do find that client that shows you interest and it looks like there might be an opportunity there, don't stop there. Keep working, keep prospecting, keep adding to that pipeline of people that have interest. And you'll find yourself working throughout the day, actively trying to assist these clients. Some of them work out, some of them won't. But in our industry, in our position as independent agents, where we make a lot more per transactions, we don't need all of the clients to work out. But we probably have to put in that 40, 50 hours a week to really establish enough of a sphere of clients that we're working with so we can have a couple of them funnel through. And it's definitely doable, and it's happening currently. And I have agents that have increased their production based on a change in activity, and the interest rates being up hasn't slowed them down. So I want to remind you guys, get out there, grind, make calls, figure out a strategic way that works within your budget and works to push you towards your goals, and push and do it. And the reason why I say works within your budget, because I understand there's a cost associated with buying leads, right? So I'm not saying, hey, just dump a bunch of money into leads, because some lead sources may not really be, how do I say this? It might not be the best use of your money based on your skill set and based on what you have available, right? Like the time that you have to give. It might be better to buy internet leads from a person that's going to give you, 1,000 leads that are 2 weeks old at a discounted rate, where you're going to sit back and you're going to make a push through all those leads, and you're going to email and text. It might be better to do that than pay a company that's going to say, okay, this lead's $100 a pop, and we're going to give you 10, and hopefully you close something. Maybe those leads do have some sort of quality that's a little bit better than some of the leads that you're getting at a bulk price. But if your skill set isn't there yet, and you need to ramp up your skills and work on your delivery and work on your closing, then maybe spending money on the higher end lead source might lead you to go through those funds pretty quickly and not see the results you want. Or maybe you've tightened up your skills, you understand that lead source, and you're okay with spending that additional higher amount per lead to get the deal done, or to get some leads. So either way, just think it through. Be intentional with it, be focused, and you will find success. You just want to be consistent. That's the main thing. Consistency within your outreach, within your prospecting, is going to be what really puts you in a position to have success. A lot of times people start, knocking down doors or making calls, and then right before they have that success that they would have had, they move on, they get tired of it, they don't see it as a source that's working for them because they've gotten hung up on a few times, or the leads seem kind of crappy, when up front it's really up to you to, not up to you, but it really behooves you to understand what the expectations are within the lead source that you're getting, right? So I buy leads sometimes for myself, and my lead distributor, he's explained to me that the average cost per closed transaction, meaning that how much is a company spending to get a closed deal in, at this time when I spoke to him, he said it was around like $1,200 to $1,500 per closed transaction, right? So you'd have to weigh that out and say, okay, if it's costing me $1,200, how much am I likely making on this deal? Is this a profitable situation? How does this make sense for me, right? But a lot of times agents are spending money on leads, and they're not spending enough to even create the traction or the potential transaction, and they're getting frustrated. But I think that if they would have understood up front how much they have to invest, then when they're investing that money and as they're along that trek to get towards that deal, they're going to have a different attitude, and they're not going to really be deterred when you have some like pushback, or you have some leads that aren't working out, because you're like, okay, look, I'm working towards that $1,200 spend that is expected, that you're expected to spend when you're working these leads. So keep that in mind. There is a certain cost per deal that is the average right now, and it varies per lead source, I'm sure. But in general, there is a certain amount that is expected to be spent. So think about that, consider that, and make the investment. You are truly running your own business when you're operating out there as a realtor, or operating as an independent mortgage loan officer. And I think we have the highest potential income even in this market, right? We have a potential to be recession proof by closing a couple of deals a month. And with the fact that thousands of loan officers at these big direct lenders have been laid off, there's even more, or there's less loan officers actively working in the industry right now as we speak than there were, let's say, 4 or 5 months ago. So think about that. Think about the advantages that have come your way because of this. You know, everything's not doom and gloom. It's really all about how you look at it and then how you attack it, right? So like, subscribe. I appreciate you. You know, leave a comment. Let me know any questions you have. But hey, look, 100 Years of Wealth, streamhomeloan.com, here to stay. And I hope that I brought you some value today. Thank you, guys.